Hello guys, welcome to the Trading Parrot. Bitcoin on the daily time frame is in the process at the moment of retesting a breakout from the top of the range. We're gonna discuss about the line in the sand that we need Bitcoin to defend to secure the upside and take the remaining part of the liquidity in the close proximity. That could mean getting us an all-time high. Not defending those lines that we're gonna discuss could easily go for the lower liquidity. After all, in the past few days, it's been pretty shaky, so it's absolutely mandatory to identify the difference between continuation versus a failure. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. Can we get 1,000 likes on this video today? By doing that, we are cutting the middle finger of the YouTube algorithm, throwing it out of the window, and I'm pretty sure that by doing so, we're convincing it to show this content to new people, so it's a win-win. Up until the end of the month, there is a sale on Trading Different, so if you always wanted to put your hands on top of the liquidity pools charts, this is the time to get yourself a 25% discount with the link in the description. And Follies posted a very funny chart in here that I want to cover. Usually I bring in some good technical analysis, but in this case I couldn't resist it. Look at the price action. First sweep the monthly high, then come back down to sweep the low, then FU, another sweep, higher high, and then a lower low to do an FU just once again to sweep, and then I sweep again, and then who knows, probably just FU again. And this is not just the exception. Actually, I checked the discussion in my Telegram channel and people were pretty much sounding the same, and the same goes with the discussion on my Patreon group. Personally, when I see all that noise, I zoom out to the 4-hour time frame and I look for what is the momentum doing. We're gonna cover that in just a second. Bitcoin Spot net volume delta, Coinbase and Binance. Bitcoin Spot on Binance is back in positive territory. This signals that buying activity is picking up on spot markets, but more importantly, that selling pressure has significantly declined. And this next post has me scratching my head because what I've seen so far is that long-term holders have started accumulating from the lows of around 74K very aggressively actually, and even with the price going up, they continue to accumulate. But in this particular chart, Axel says that since November 2023, the supply held by long-term holders, 18 months to 3 years specifically, has dropped by over 2 million bitcoins. This cohort cashed out around $138 billion during the distribution. Based on their remaining holdings, another 500k bitcoin could hit the market by year end. If we zoom out just to this particular bull market, you can see that the peak of accumulation of long-term holders was around January 2024. Since then, there was a huge decrease, which accumulated back before the breakout of the previous megaphone pattern of 2024 into October, November. Since then, they declined even further down, but once again, they are in the same activity of heavy accumulation. But this time, the top of the accumulation is lower than the peak of October, November 2024. So there is a decline on the tops, but still you can see that it's oscillating in the bullish phase of accumulation. What happens after that? Once they stop, you get the breakout, they hold for a bit, and as soon as you get an aggressive move up, they start distributing aggressively once again. In this case, this is a different view of the same data, but emphasizes on the total holding rather than the actual accumulation or distribution. And I think it complements the other chart in the sense that from around 2024 and on, there is a decrease as well. And everybody's focusing on Bitcoin, on how amazing this new tech is. New tech, not so new, but just 10 years, at least it's new relative to stocks. And what I'm actually focusing a lot is on what's going on with the general markets. Let's look at this. Retail traders bought $4.1 billion of US stocks during the first 3 hours of today's trading session. Yes, we're talking about today, the most in history. And since we're talking specifically about retail, to me that is something concerning. If we go to the indices, and I'm gonna go back to Bitcoin, but this actually affects the most Bitcoin, so you cannot skip it. If we look at the VIX, the volatility index of the S&P, specifically the RSI weekly, you can see that we are right there at support. So the basics, support should hold most of the time, and we can see that 1, 2, 3, 4 times it has held. There is of course the likelihood that it breaks lower, in which case the volatility diminishes and Nasdaq and S&P can carry on higher. But since this is support after coming back from 76, now hitting 45, similar to all these waves down after an expansive move, I will personally bet very humbly that here we're gonna get this support respected. It's not a forecast, I just think that that has 60, 70, 80% chances of playing out. That means that this support on the volatility index hits back up. Doing that affects Nasdaq and the S&P negatively. And if you look at where are we standing with the Nasdaq and the S&P, we are in the opposite situation as the volatility index. We are facing a global resistance after breaking down. This is the Nasdaq RSI and this is the S&P RSI, both on the weekly. And you can see that both are hitting that global resistance. So same analysis. We can break out from this resistance, but hey, watch out after a move of already 30 points on momentum to the upside without any stop. Can we do it? Yes. If we do it, continuation. If we get a rejection from here, we should be expecting a wave down. So watch out with retail buying the most in history right there against a resistance. Again, not a forecast, just a small tiny warning. And if you want to trade stocks, apparently now you can do it directly from Bybit. Somehow I couldn't get it to work, so maybe they are still rolling out this update. In the meantime, if you want to trade $500 on any of these coins for free and get to keep whichever profits you make with that, there's a link in the description to open a new account on Bybit. You have to open the link and click register to claim to get it to work. There's two news standing out in here. The first one is sorry bears, Bitcoin analysis dismisses the 107k Bitcoin price double top. The key points are Bitcoin is not in line to cancel its attack on the all-time highs, says the Bitcoin Fundamental Index. And what the hell is that? I don't know. Bitcoin price strength remains intact, says Swiss Block Technologies, removing the risk of a double top. Historically, a return to within 10% of all-time highs delivers price discovery almost every time. So here is the Bitcoin Fundamental Index. It has remained stable in the neutral channel. There's been some downside in this area of the price, but it came back into the blue, so apparently it's favoring continuation. Strategy adds 7,000 plus BTC for $765 million, gets hit with a class auction lawsuit. Apparently this accuses strategy officials of having failed to represent the nature of Bitcoin investments accurately. So we'll see if this actually is gonna just force Saylor to update his investors, or if there's going to be any longer process that could affect strategy in any way. We'll keep a close eye on this case because obviously there's a lot of Bitcoin being held by this company. And I forgot to say, guys, but in every single post of my Telegram group, if you hit TTP charts, it takes you to the free version of the charts. But we have made a huge update listening to your feedback, and now you get access to all the charts. Instead of limiting which charts you can access, which ones you cannot, or the frequency updates of the charts, we get all of that the same as the paid version, but the free one, you just get 3 credits a day. And that should be sufficient for you to pay a visit to the Telegram chart and look at all my charts with all the annotations 3 times a day, different charts. I think is good value for free. An incentive to go to the downside that I just want to keep a quick reminder is the 3 CME gaps that we have here on the screen. Price on Binance starting with 99.1, 96.8 and 91.6. Something I want to give you a heads up is the open interest here on the lower end versus the price on the top end. And you can see that if we do TA to both simultaneously, in this area in here, price broke out before the open interest. But now we are in the opposite situation. It seems like the open interest is catching up and overpassing the price action because we are right there at the resistance of $33 billion in open interest, whereas the price action is here testing support. That has been completely the opposite in all this area. Price action did everything first, but now there is a shift. Let's remember that we broke out from the megaphone pattern with the open interest taking the lead. Price action followed through. So we are now in that same scenario, which is something good. But on the other hand, we are right there at that resistance. I really want to see what are we going to do this, which is probably the 5th or 6th time that we hit 33 billion in aggregated open interest across all exchanges. And considering that every time we have done that, we have had some pullback, we'll see what happens with this, or if we get lucky and we go into the 35 billion and potentially we go into open interest aggregated discovery mode, which is what we did in October, November in 2024. And as you can see, I have made an update to the Bitcoin status and I have turned the 4-hour into neutral color. The daily now, instead of being light red, is just dark red, getting closer to a neutral. We could potentially be seeing the Bitcoin status chart turning all into green eventually if we manage to defend the lines I talked about in the beginning of the video. On the 4-hour we have new higher highs, new lower lows, because there's been an expansion like a megaphone. The breakout retest that was about to fail yesterday has been completed. Not 100% perfect because we were below the support at some point, but we managed to recover. And at the moment we see on the 4-hour just a sideways momentum with new highs, with not new highs. Let's have a look at the 4-hour chart. You can see that I have updated this pattern again, which is a flag pointing to the upside. I tend to think that when we do those flags to the upside with the momentum going down, it's not a great sign, but we have a mixed bag because we already have a breakout on the RSI. We came back to this line and we are defending it. That's why I'm qualifying the 4-hour as neutral. That changes if the RSI 56 managed to take 67, which was the high of this completely nuts price action of Sunday. If we get into 67, price will have already made it to 108.7 and of course challenging the all-time highs. Notice that in the momentum, it's just a move to this area. It's not very far actually. If we go into the past breakout, the one in 2024, that we have this 1, 2, 3, 4 levels, and at the 4th level, the highest momentum, we reach 90K. If we compare that with the current price action, you can see that we haven't done the level 4. And there is a significant difference because between 3 and 4, it was 10 days. And so far, we've been 30 days without doing the level 4. That level 4 is located at an RSI of 93, if I remember right. Yeah, correct, 93. And if we were able to use these 30 days of reset from where we are getting into an RSI of 93, yes, guys, it's jaw dropping, but that is 153K. So it's now very tough for me to think that we are actually going to potentially get to an RSI of 93 from here. And considering that we made it to 81 after 15 days, which was making sense relative to the past performance to do it at that point. With this failure at 81, I am tempted to think that this move of 47 could end at 77 and not fully achieve the 93 in one go. That doesn't mean Bitcoin cannot go to 150. It just sets a completely different timing to being able to achieve that. Getting to 77, just because I'm curious, will mean getting into 114K. So just hitting that level and failing to do the 4 level that mimics the previous breakout of 2024, we still get a compromise target of still 113K, which is really great. So let me know in the comments if you subscribe to that idea that the 30 days could potentially damage the previous performance, repeating now, getting into 93, or if you think, bollocks, we're just gonna get to 93 and get into 150K very quick before we even notice. Looking at the price action, we have some fair value gaps below the price that are good incentive to just continue potentially the sideways. Let's not discard that option. And we have the fair value gap at 103.9 that ends more or less at 103.5. At that point, we will be visiting again 47 RSI that has been support already, not just once, but 1, 2, 3, 4 times in this price range. That RSI is 103.6 in confluence with the end of that fair value gap. On the daily time frame, we are doing the most interesting things of all the time frames, probably together with the weekly, which is to test the previous resistance, to put a huge wick to the downside. Remember that in the video yesterday, even though we were this low at 102, I say that during the day, we can reclaim all of that. And what we have to do at the end of the day is to close above 105.4. And pretty much we did exactly that, favoring the bullish case. And today we are again retesting that achievement. That's a big achievement in the price action, and it sets a test of the point of control, way less possible at the moment unless today we fail to defend that 105.4. It is under the hood, under the carpet, where we are starting to build a stronger case for a bearish daily price action. And I'm going to focus on those because those have some probabilities of failing the move up. They don't guarantee that, but keeping an eye on that and seeing the magnitude of those metrics could be a great alpha to pull out in case they reach a threshold that we don't feel confident holding any long. On the RSI particularly, we lost the first line of defense, the second line of defense in here, and today we could be losing the third one, potentially initiating a rolling over and a stronger move back down in a challenge to the downside on the RSI. RSI has the chance in here to reclaim 69 and to do something very similar to when we lost the first line of defense. When we lost that one, we did lose the level, revenge rally, lower low, and from that level of disappointment, we sliced the whole range with a new high. So if we were to do something similar, we have done already the breakdown, the revenge rally, and we haven't done, but if we get a low like this, we are in a very similar situation as in this point, potentially doing another move to a new high. That is kind of the recipe to defend the 103.5 that we are talking about. Notice that I rushed to put this line in here. If I would have done that at that point, it would have been a breakdown. But we decided that the actual pivot was this. So let's not rush ahead of ourselves because this could put the pivot anywhere. So this is just a very early indication of a potential breakdown. But we'll see what happens in the next couple of days. Because of that, I'm downgrading the bearishness of the daily, but I'm keeping an eye on those indicators. And the summary is about to break down third line of RSI support. That is just something slightly important at the moment. There's been great price action, but needs to prevent further building of bearish divergences, which is what we're currently doing. We need a higher high in the momentum as well. If we don't have higher highs in the momentum and the price, there you go, you get bearish divergences and the potential for that channel to the downside. Hash ribbon is still in capitulation. MACD bearish cross is confirmed and it hasn't been yet invalidated. Even though we are at the top of the range, we are still in the context of a bearish divergence, of a bearish cross. The SOPR is starting to spike in profit taking, so we'll show you that in just a moment. You can see that after the bearish cross, we tried to put a bull one, but we got rejected. So this is still in the context of a bearish cross on the daily. The weekly, very similar narrative to the daily. We just managed to cross 1 week above the resistance and we start the week now defending. So daily and weekly are now defending and both with the price above the support so far. I am monitoring the volume 5 declining very sharply in here from 88 to 62 so far, and in the gray. Areas like that have not necessarily been the full peak of the price, but all of them except for one have been great areas to DCA out of your position or to start to build incrementally a short position into the rally. And if you're curious which one is the exception, it is this one in November in 2023, where we started declining the volume, but price was very insisting, going 30% still up with the volume going down into zero. So that shows you that in the early stages of a bull market, trying to short a rally can be really, really, really tough. So even though that is one off in the whole bull market, be always prepared to get something like that if something goes wrong with the short, of course. And if you tell me why not longing, I will say I will never long at this point in here. My longs are all in areas of fear. We build a position in this area. Unfortunately, halfway through here, I went for holidays and I closed my swing trades. I still have my spot, which still puts a smile in my face, but no long swing trades from this range at the moment. If you are already in a long from the lows, well, you can use all this information to defend your long and to decide your exit at some point. SOPR now at 103, getting very close to the highs of 104, where we see quite high distribution from profit takers. Those are typically short-term holders though, but you can see in past performance that those red areas are areas to keep an eye for. The capitulation is still here. The mouth is still open of the moving averages applied to the hash rate. The hash rate has increased, which is positive, but we still don't see it reflected in the hash ribbons indicator. As soon as I see a buy signal, I'm gonna share it with you. So make sure you're following me on Telegram, Instagram, and Twitter. Yesterday, we have pretty big inflows on spot ETFs on Bitcoin, 667, really impressive, and the highs are looking really beautiful in the total cumulative flows. We are in grid at 71, and let's look at the liquidity pools. So the shorts are entering in here at this equal high on the 15-minute chart, and the 100K definitely is very heavy. If we remove the 10x's and we go just for all the degens, you can see the 25 to 100x are all located at 100K. We have some amount in here at 107, but definitely the 100K is deserving a visit. It's not a forecast, but eventually they're gonna get hit. If we continue to defend those levels of support for the daily, it's gonna make it very difficult for the 100K and below to get hit. So that's why really paying an eye on that 47 on the 4 hour, really paying an eye on defending the breakout from the top of the range and not producing just a liquidity hunt. A liquidity hunt can be spot. If we come back inside the range, we put daily candles below it and we stick around there, and ideally, well, taking the lows of this range, which is already 100K, that could spell the path towards the point of control. And on the longer term liquidity pools, you can see that we still have leftover up until the all-time high. Then we have that depression where we could slow down before we continue consumption of the red. That is the big party fireworks at that point. That is the largest liquidity pool in all the range. If I include 3x's, you can see it in red. If I remove 3x, it's still in red, and there is some 10x here at risk. I think that 10x possibly could be taken in the next days. That ends at 108.4 and the yellow at 109.2. Remember, the highest the leverage, the most attractive it is for market maker to take it. A reminder that in the last month, liquidation Heatmaps are still very heavy at 92.7, and if we manage to get away with some pullback, at this point a decent pullback, that could be a very interesting area to take. The same story comes from the liquidation map. At the moment, the longs are at the highest risk with 280. The last two times we got in there in the past day, we saw some rejection. We'll see now if we also get rejection and we take that close proximity liquidity first. The bid-ask ratio at the moment is defending the new achievement of the daily. You can see a 0.03 in the bid-ask ratio, which is in the positive, meaning that there are some limit orders defending. We'll see about that in Market Monkey Terminal in just a second. There is no high leverage longs, which is healthy. We have come down to 35 in amount of longs, now at 37. That is why we are kind of rejecting initially there. If we see the longs coming up aggressively and an increment in the bid, we could defend a lot better this level. So far, we don't have that yet. And let's look at the price action in Market Monkey Terminal. You can see that they were defending the 104.6. They enter at 104.8 and they pull out that defense below the price. So far is gone. And now there is just resistance at 107 and 100 and nothing else above or below that is significant. I incorporate the order depth in here, which is some sort of bid-ask ratio as well, to compare it with high block capital. And also I wanted to make sure you are aware. You can see that the CBD increased in the first breakout and consolidation, stayed there. On the second one, it increased during the consolidation and also during the breakout. What is different now is that after this breakout, it has decreased the CBD to the same levels of the previous consolidation, contrarian to just going sideways. So we do have in this area a divergence of CBD versus price action. Something to note, that is a data point that has been mentioned in other channels as something positive. I see it as something negative because CBD is aggressive buyers and sellers ratio. So if you see that this declines, it means that there are further aggressive sellers in this area, and in this area we were building up aggressive buyers. So you tell me if you agree with my statement or if you think that this is still something bullish to see from the CBD. Of course, my opinion, your opinion. Let's look at FAR charts. We can see that support is at 103 with 47 million. Then we have immediately above the price at 106k 40 million. Another 40 million at 108, and then finally at 110, 94 million defending any breakout beyond that. They have also placed 63, 64 million at 120, and you can see that purple whales remain very aggressive in this area. They are a leading indicator, so if they remain aggressive, they might still have a plan for hitting the highs again before being done. And to the upside, we have this fair value gap that ends at 105.6. We have fair value gap below at 103.5 and the usual suspects below the price. Guys, if you want to trade Bitcoin or altcoins, consider opening an account on a non-KYC exchange. That means that you can deposit in just 30 seconds your crypto and start trading immediately with leverage. By using the link in the description to the exchange Bluffing, you can get all of that plus 15% cashback up until the 26th of May. And that's not all, because once you deposit and you start trading on Bluffing, you can use this link or QR code. And if you meet the requirements, which are written down below, you can straight away get the products from my Patreon shop for free, including the 3 months Telegram charts and the 3 months Pine scripts. Thanks so much for watching. I'll see you on the next one. Take care. Bye bye.